So we know these high mortgage rates are wreaking havoc on the housing market. They're a disaster. How big of a disaster is it right now?
Well, it's been a slow building disaster, so I don't think it feels more apocalyptic now than it did 4 months ago. The housing market is just taking a beating because affordability is at a 4-decade low. And so at some point, we just need to catch a break from the Federal Reserve, and that doesn't seem likely to happen in 2023.
Is it having the desired effect on prices, on rents, given it's also coming up against this backdrop of super low inventories?
That is the problem. So it has certainly depressed employment in the real estate sector, but it hasn't hurt prices. Prices keep going up. Usually in a downturn like 2008, people don't want to sell, but they have to sell because foreclosure is imminent. In this case, we have had a soft landing. The rest of the economy is doing well. People are not in dire economic straits. And with a 3% mortgage, there's no way they're going to put that house on the market. So we've had a downturn in sales volume, but an upturn in prices. And that means that the sales volume crimp is just going to last a long, long time.
The housing market in the United States is constantly evolving, shaped by economic changes and technological advances. Several trends have emerged in recent years that are influencing the way Americans buy, sell, and own homes. This scenario examines major developments in the U.S. housing market and provides insight into the factors driving these changes. This last report I was talking about hit the press on December 7th. We have got some fresh insights into what's happening in the U.S. housing market based on the latest scoop from Realtor.com. Please don't forget to subscribe to our channel for the latest financial news alerts. Asking prices. Let's talk about bid prices on a national scale. The average asking price of newly listed homes increased by 1.2% compared to the same week last year. This is the third week in a row that we have seen an increase of 1.2%. Interesting trend, right?
So then, Glenn, how are you thinking about and planning your business around 2024? Is it a recovery year for real estate? Are you making moves in anticipation around hiring agents or more downbeat?
Do you remember when Rambo is asked, Rambo, how will you live? And he says, day by day. That's how we're planning this business.
Okay.
We can't look 3, 6, 9 months out. What we face right now is 7.5% mortgages, 4 million annualized home sales rate. We're living in the now. And if things get better, that'll all be upside in the business.
How is your business dealing with the changing rate environment? Can you be profitable? Can you make money in a down market like this?
We can. We just have to reduce our costs. And so what we've done is cut non-core businesses, laid off some people, which I still feel ashamed about, but it's put us in a position where as we take market share, we can build a profitable business. But there's no free lunch here. We have to take someone else's lunch to be able to grow because we are in a shrinking market and we feel poised to take significant share over the next 6 to 9 months.
Inventory uptick. Last week it was up 3.1% from a year ago. It is the biggest year-on-year increase since mid-June. My hunch? The increase in inventory is related to the decrease in demand for home purchases. It does not make any sense. Digital real estate transactions. The real estate industry includes digital platforms for buying and selling homes. Virtual tours, online documents, and electronic signatures simplify the real estate transaction process. New listings. Now, there is a change. New listings are higher than a year ago. New listings were up 7.1% in the 4 weeks ending December 3rd, according to Redfin. But wait, even though we've put last year behind us, we're slowly getting back to 2020 and 2021 levels. Inventory numbers. According to AltosResearch.com, we had just under 556,000 homes for sale in the week ending December 1st. Year over year, around 550,000, a slight increase of 1%. But wait, even though the stock hit a late high this year, it's still down 33% compared to the same week in 2019. Market. Now we'll touch on how quickly homes are coming off the market. Days on market are 3 days faster than last year. This is the 9th week in a row that homes have sold faster than in 2022, a change from the previous 58 weeks. Days on market were longer to sell. Remember, this is a lagging indicator based on closed home sales. Price drops. They fell 8% last week, marking their 27th consecutive week of declines compared to the same period last year. This is in stark contrast to the triple-digit gains we saw earlier this year. There are two main reasons for this: limited inventory and an increase in price declines last year have caused sellers to act more cautiously this year. Single-family housing demand creates shortages. Migration from cities to the suburbs is causing increased buyer demand for single-family homes. Family houses mine. Demand for family homes in the suburbs is high. Realtors predict home sales will grow another 10% in 2021, reaching the highest level since 2006. Single-family home searches hit a 4-year high in 2020, according to Redfin's chief economist. According to PricewaterhouseCoopers, demand for single-family homes is driven by several factors, including low interest rates. The importance of the home is growing due to quarantine, social distancing, and remote working. Strong housing trends before the pandemic. Pandemic housing demand is being fueled by another overlapping trend. Millennials are entering the home ownership phase of their lives. Millennials looking to buy their first home or start a family are also fueling suburban growth. Undefined online searches for home loans increased in 2020 but have decreased recently. As a result, the inventory of single-family homes is at its lowest level in nearly 40 years. As of September 2020, approximately 830,000 U.S. households were on the market. This number is down 39% compared to September 2019. The average time a home has been on the market is 54 days, down 18% from September 2019. A New Jersey real estate agent likened buying a home in a New Jersey suburb outside of New York to a blood sport because of the high competition among buyers. Although these conditions will last until 2021, it is not clear how long they will last. The market is expected to stabilize eventually. The pace of new construction is likely to keep pace with rising demand. Management and construction companies benefited from the lack of apartments and rising house prices. Housing construction for single-family and multifamily homes is growing, reaching the highest level since 2006 in 2020. Future predictions. We look at unemployment, mortgage rates, inventories, and the delicate dance between supply and demand to predict the way forward. There is still some volatility in the market, but one thing is for sure: it is very important to monitor these trends.
Yeah, we've had some in the realty business suggest that ongoing demographic trends, marriages, having kids, going to college, even dying, means that the industry will churn through some of these rate levels, which of course we coexisted with a couple decades ago. I wonder if you think that's too Goldilocks.
No, I mean, if you look at the number of existing home sales in the United States, it goes between 4 and 6 million. During the pandemic, it actually went to a 6.5 million annualized rate, nearly 7, but it's never gone below 4 since we've been tracking it, and the population is about 10% larger than the last time we hit that low, which was in 2008. So we are now at the most basic level of Maslow's hierarchy, where shelter is a human need. The only people who are moving are the ones who absolutely have to. And there are people who are relocating because they're being called back to work, or they get a divorce, or there's a death in the family. So those are the only reasons that people are moving. I wouldn't call that a Goldilocks scenario. I would call that rock bottom. But that's where we are right now. And the only relief is that it can't go much lower. We haven't seen 3.7 million homes sold across the United States since we've been tracking the number. 4 is about as low as it can go.
Rental property market declines. The rental market for both residential and commercial properties in major cities declined in 2020, in part because people moved from cities to the suburbs. Demand for rental properties in major cities will continue to fall as people who can afford it look to buy homes, while those who cannot or will not look for other alternatives to save money will be left behind in renting. Last year, the number of young professionals giving up their apartments and moving in with their parents increased. According to Pew Research, 2020 was the first year since the Great Depression that a majority of young adults ages 18 to 29 lived with their parents. Migration from major cities has led to the highest vacancy rates and falling rents since 2010. While rental vacancies are increasing in major metropolitan areas, real estate demand is also increasing in medium and small cities across the country. These areas exceed the offer. A downturn in the rental market creates opportunities for real estate investment. Investors can now buy distressed rental properties with the expectation that tenants will return to big cities once the pandemic is over. Investors will also be able to take advantage of commercial properties such as hotels and retail buildings that will be vacant in 2020 and turn them into residences. Gentlemen, there's a lot to unpack, but hopefully this breakdown will give you a clearer picture of what's going on in the U.S. housing market. If you find it useful, a thumbs up would be great. Thank you for the meeting and arrange the next meeting. Cheers!